next accounting standard is AS 19. AS 19 deals with accounting for leases. AS 19 deals with accounting for leases. So generally we know that accounting for leases. Lease means what generally? Lease means what generally? Generally lease means what? We have to take some asset. We have to take some asset for some certain period for an agreed price. For an agreed price, we have to take some asset. Correct? That is the general meaning of lease. Correct? I will use that asset for that particular period. I will use that asset for the particular period. That is the meaning of lease. Okay? For example, lease rent paid by the company. Lease rent paid by the company. Yearly they are paying 1 lakh rupees. Yearly they are paying 1 lakh rupees. What is the accounting treatment in the books of accounts? What is the accounting treatment in the books of accounts? I am using particular lease. So I will continue. I asked you a question actually. I am paying lease rent to the owner. I am using plant and machinery. I have taken the plant and machinery on lease and I am using, and yearly I am paying lease rent to the owner, exact owner. I am doing some business. Okay. What is the accounting treatment in my books of accounts? I am the user, I am the lessee, I am the user of that asset. I am paying lease rent. Okay. What is the accounting treatment in my books of accounts? If I pay lease rent to my owner, how I will account that lease rent in my books of accounts? Just share your views. Just share your views. P&L debit from Sweta. What about others? What about others? What about others? Debit, debtor. What is that? DR from Maya Dosha. I don't know. I don't understand. DR means what? DR. Debtor. What is that? Debit. Debit to P&L account. Okay. Then what about others? What about others? If I pay lease rent, what is the accounting treatment? Try to participate. You should know the basics first. Then only we can discuss the main topic. We should know why this accounting standard first. What is the use of this accounting standard? If I pay rent, lease rent to my owner, what is the accounting treatment? What about others? No idea, what? Did I ask any tough question? Did I ask any tough questions? Assets in balance sheet as a leasehold property by deducting rent. Asset in balance sheet as a leasehold property by deducting rent. By deducting rent. You can show it as an asset. If you are showing as an asset, then how can you deduct rent also at the same time? If you are showing it as an asset, then you can claim depreciation. You are trying to, yes, of course, I agree with your answer, but I need more answers. I need more answers. What about others? So the purpose of this standard is, normally whenever we pay lease rent, we should debit to the P&L account. Because it's a recurring expenditure. Every year, every month we will pay to the owner and for the usage of particular assets. Okay. So what happens? There is some scenario. I will tell you the scenario. There is some scenario. For example, worth of the asset is 10 lakh rupees. Worth 10 lakh, and life of the asset is 10 years. Okay. Asset owner is A. B is the user, that is, who has taken the asset for lease. Lessee, you can say lessee. Owner is the lessor. What happens? Agreement between A and B. There is an agreement between A and B. Lease agreement between A and B for 10 years. Lease rent per annum 1,50,000 rupees per annum for 10 years. Okay. So as per you, as I said, generally what will happen? A is the owner, B is the user. A is the actual owner, B is the user, lessee. Lease agreement between A and B for 10 years for using that asset, 10 lakh rupees asset worth. How much B is paying to A? B is paying 1,50,000 rupees. B is paying 1,50,000 rupees per annum. So as per you, generally what we will do, every year P&L account of B, what will happen? Expenses, income, debit the expenses to rent 1,50,000 rupees. Every year, first year, again second year is also what B will do. Expenses, income, P&L account to rent 1,50,000 rupees, he will debit. That accounting treatment we already know. Correct or not? Debiting the P&L account, that treatment is we already know. So why this accounting standard, sir? Then what is the use of this accounting standard? Why we are studying AS? Because we know already accounting treatment for lease. Debit the P&L account, we are paying rent. So logically you have to think. There are some things you have to think. What logical, sir? There is a concept called substance over form. Have you heard about substance over form? Yes or no? There is a concept called substance over form. Have you heard about that? Yes or no? Tell me. No. No, sir. by Padmavati. What about other? Substance over form. There is a concept called substance over form. No sir, no sir. Substance over form means, before substance over form, in this question, who is the owner of the asset, A or B? In this question, who is the owner of this asset, A or B? A is the owner and B is the user. A is the owner and B is the user, that we know. Substance over form means generally, legally in this question, A is the owner. A is the owner of the asset, and he is eligible for claiming that particular thing as an asset, and he is eligible for claiming depreciation in his books of accounts. A is eligible to claim depreciation in the books of accounts only. Then what about substance over form, sir? Substance over legal form. Substance over legal form. Legally A is owner. Legally A is owner. But by substance, but practical, but by fact, who is using the asset? Who is using the asset? A or B? Tell me. Who is using the asset? A or B? Who is using the asset? A or B? Just tell me by reading this agreement. B, from Darshini B, from Padmavati B. Who is using the asset? A or B? The next question is, how long B is using? How long B is using? How long B is using? What is the life of the asset? What is the life of the asset? 10 years. What is the life of the asset? 10 years. What is the lease agreement? What is the lease agreement? How many years lease agreement is made? How many years lease agreement is made? 10 years lease agreement is made. Life of the asset is 10 years. Lease is also 10 years. And owner is A, but B is using for 10 years. Owner is not going to use. And what is the price of the asset? What is the price of the asset? What is the price of the asset? Worth of asset is how much? 10 lakh. Worth of the asset is how much? 10 lakh. But how much is paid by B? How much is paid by B? 1,50,000 into 1,50,000 into 10 years. Per annum 1,50,000 into 10 years. How much? 15 lakh. How much is paid by B to A? 15 lakh. So legally A is owner, but the asset is used by B for 10 years. Life of the asset is also 10 years. B is going to maintain the asset. Who is going to use that asset for his business, and he is going to generate revenue out of that asset. Who is going to generate revenue? B is going to generate revenue by using that asset for his manufacturing purpose. And also A and also B is paid 15 lakh rupees, which is more than the worth of the asset. 10 lakh rupees is the only asset worth is only 10 lakh, but B is paying 15 lakh to A. So usage is done by B, payment made by B, which is more than the price of the asset, and the life of the asset is 10 years, and the lease agreement is also 10 years. So practically who is using that asset is B is using that asset, not A. Only A bought that asset and he has given to lease to B. Job is over. And he is collecting money from B, which is more than the price of the asset. Okay? In this particular scenario, even though owner is A, but legally owner is A, but practically usage is done by B. Even though owner is A, but practically usage is done by B, not A. So by applying the substance over form logic, by applying the substance over legal form logic, by applying the substance over legal form logic. Substance over legal form means what, sir? Legally A is owner, but by substance B is owner. But by substance B is the user, but he is actually becomes owner, because practically he only use the asset, and he is also paying the money which is more than the worth of the asset. and 10 years life of the asset, 10 years fully used by B only. In this case, substance over form logic should be applied. Substance over form logic should be applied. By applying the substance over legal form, that particular lease, that particular deal should be accounted in different manner. But that particular deal should be accounted in different manner, not general manner. What is general manner? Debiting the P&L account of B. Every year, rent, debiting the P&L. That is general accounting practice. Okay? Then what is the different accounting practice, sir? What is the different accounting practice, sir? Till now you understood. Till now you understood or not understood? Till now you understood or not understood? What I said, do you understood? Substance over form, do you understood? Meaning of substance over form. How that substance over form arrived, sir? I gave you example. Usage, year, price, all these things are favorable to B. Till now, substance over form, do you understood or not understood? Yes, sir, yes, sir, yes, sir. Padmavati, Nisha, Kavita. What about others? Till substance over form, do you understood? I will tell you the different accounting treatment. But before that, till this discussion, do you understood? Then only you can able to understand why this accounting standard. Because we know the accounting treatment already. What is the new accounting treatment? That is what we are going to learn. What about others? Darshini. Kavita, yes sir. What about others? What about others? What about others? What about others? Yes sir, understood from Revati. Okay. So with this, we will wind up for the day. In continuation with the previous class, we discussed accounting standard 19, that is accounting for leases. So we will continue that. Actually, in previous class I explained lots of basic understanding of accounting for leases. Give me this standard, and we discussed about substance over form, substance over legal form. So the ultimate purpose of this accounting standard is in case of certain transaction, the user, that the lessee is using the asset for unlimited period, or he is utilizing the life of the asset fully for itself, for his own business, and he is paying lease rent which is more than the worth of the cost of the asset, and he is undertaking the risk and rewards, and he is responsible, that lessee is responsible for risk associated with that particular asset. What is risk? What is the risk associated with particular asset? Like damages, maintenance, or any obsolescence, like that you have a different type of risk, and you will take insurance also. That lessee itself will take insurance, and there will be an agreement between lessor and lessee. After the life of the asset, the asset will become scrap. That scrap also will be purchased by lessee itself. Lessee is giving guarantee to the lessor that after the effective life of the asset is over, I myself itself purchase this assets. Okay, so these are the things is happening in a real scenario, in practical scenario. These are the things happening. So because of this reason only AS 19 is introduced. Normally, what we will do, lease rent is paid off, debit P&L account. In the books of lessee, lease rent is paid means debit P&L account, because it's an expenses. That is what we used to do. But in case of this nature of lease, we have to account this transaction in a different manner. We have to account this transaction in a different manner. That is what we are going to study in this topic. Okay. So I will discuss from the material itself. I will discuss from the material itself because lots of points is covered in the material itself. So the accounting standard is not applicable to the following type of lease. Accounting standard is not applicable to page number 37. It is actually, it is there. You can also view that page. You just maximize the page in your mobile so that you can easily see. Okay. We will start from the applicability. We will start from the applicability. Applicability means for which type of transaction this AS 19 is not applicable. Negative manner it is given. Negative manner it is given. Okay. So what are the things? What are the types of lease which this type of accounting 19 will not be applicable? What are the types of leases? First point. Just go through the first point. Lease agreement. So first point is lease agreement to explore such as oil, gas, timber, metal and other mineral rights. What is the meaning of this one? I have a lease agreement with the owner for extracting, for exploring the natural resources, oil extraction, oil exploration, gas, timber, metal. If I did any lease transaction with owner for this business, then AS 19 is not applicable. Then what is the next one? Licensing agreement for motion picture, film, video recording, patents and other things. For this type of transaction is also AS 19 is not applicable. Lease agreement to use land. Lease agreement to use land. For this type of lease also AS 19 is not able. You please remember this point. They will ask in true or false. They will ask in true or false. Okay. So applicability is over. Applicability is over. Then we have to understand the types of lease. We have to understand the types of lease. So types of lease as per AS 19. As per AS 19. Lease is classified into two types. One is finance lease and another one is operating leases. Okay. So finance lease and another one is operating leases. What is this finance lease? What do you mean by finance lease? What is this operating lease? We will understand finance lease. This whole topic is Major focus is for finance lease. Finance lease. So, as I said, special type of lease. As I said, this is called special type of lease. Special type of lease is what, sir? Lessor will be there and lessee will be there. So, as I said in previous class, life of the asset, life of the asset, 5 years, and lease period is also 5 years. Lease period is also 5 years. Lease period is also 5 years. Then what happens? Price 10 lakhs. Lease rent 3 lakhs per annum. 3 lakhs per annum. I'm explaining now finance lease. Okay? And risk is transferred. Risk is transferred to lessee. What risks, sir? Maintenance, any damage to the asset, insurance policy, all these things is the responsibility of lessee, user. Then what? Reward. What do you mean by reward? Reward means I got a lease plant and machinery for my business purpose. I got a lease plant and machinery for my business purpose. What is the reward I will get? What is the reward I will get? If I use the plant and machinery, what is the reward I will get? If I use the plant and machinery in my business, I will generate revenue. I will make production. I will do manufacture. I will make revenue, and I will make profit. That is the reward. That reward is transferred to. That reward is transferred to lessee. Lessor is the actual legal owner. Lessee is the user of the asset. Okay. So then scrap value. Scrap. When the asset will be scrapped, after the useful life of the asset, guaranteed guarantee given by lessee to lessor, that he will purchase. Lessee will purchase this asset as a scrap value. That is guaranteed residual value. Residual value, scrap value, all these things are interchangeable. So in this case, if this is the type of transaction, then that particular lease is called finance lease. In simple language, you can see when the risk and reward of the particular asset is transferred to lessor from lessee, then that lease agreement is called finance lease. I'm explaining what is finance lease. Okay? Then if it is not transferred, sir, risk and reward is not transferred to lessee, sir, user, then it is called operating lease. Where it is given operating lease means it is not a finance lease. Operating lease means it is not an finance lease. Okay? That means risk and reward is not transferred. Risk and reward is not transferred. Then it is an operating lease. Why we are studying this one? Why finance lease? Why operating lease? Because the accounting treatment for finance lease and operating lease is totally different. That is why we are studying. So for that we should know, we should interpret, we should analyze, and we have to conclude whether the particular transaction is a finance lease or operating lease. That is why we are studying. Okay. So up to this you got some basic idea. Up to this you got some basic idea of finance lease and operating lease. Shall we proceed further? Shall we proceed further? Shall we proceed further? Just put a message. We'll proceed further. Yes, sir. Yes, sir. Once again, sir. Yes, sir. If the risk and reward is transferred, to lessor to lessee, lessor is the actual owner, lessee is the user. If the risk and reward is transferred to lessor to lessee, what is risk? Maintenance of the asset, damage, if any damage is happened, the lessee has to take care. Insurance policy, lessee has to take care. And the reward, what is reward? Utilization, benefit from the asset. Who is going to enjoy the benefit? Who is going to use the machinery for the business? Lessee is going to use the machinery for the business, and he is going to generate revenue. If the both these condition is satisfied, then it is called finance lease. Otherwise, it is an operating lease. Okay. So we will theoretically understand now what is finance lease, what is operating lease. Just go through the points. First, you will just go through the points. Finance lease. Just go through yourself. Please go through. Just go through. You please go through all the points. Then I will also explain. By the lessor, but not the legal ownership. But not the legal ownership. In following situation, the lease transaction are called finance lease. So as I said, substantially all the risk and reward. What is risk and reward, sir? For that reason only I explained, gave you the examples. Risk means what, reward means what. Incidental to ownership of an asset to the lessee by the lessor. Okay? But not the legal ownership. Legally, he will not sell the asset, but simply all the benefits. If I'm a owner, what all the benefits I will use, I will get all the benefits. Then it becomes finance lease. So for that, they are giving some points. They are giving some examples. What are the examples? The lessee will get the ownership. First bullet point I am reading. The lessee will get the ownership of leased asset at the end of the lease term. Like as I said, guaranteed residual value. As I said, guaranteed residual value. Lessee is giving some guarantee to the lessor. After the use of the asset, effective life of the asset, it will become scrap only now. I will buy myself. That is guaranteed residual value. Then second bullet point. The lessee has an option to buy the leased asset at the end of the term at price which is lower than its expected fair value, and which option will be exercised. Thing is, lessor is giving some choice to the lessee. You can even buy this asset after the effective life of the asset. If you want, you can buy this asset yourself. That is an option given by the lessor to lessee. And the third point, the lease term covers the major part of the life of the asset. As I said, lease life of the asset is 5 years. Lease agreement is also 5 years. Not exactly 5 years. 4 years also okay, because the major portion is covered. 80% of the life of the asset is covered. Okay, that's what they are saying. Life of the asset is 5 years. Lease agreement period is also 5 years. So after 5 years, no one can use that asset because already it is depreciated. So At the beginning of lease term, the present value of minimum lease rental covers substantially the initial fair value of the leased asset. As I said, price of the asset is 10 lakh. Lease rental is more than the price of the asset. For example, per annum 2 lakh, per annum 3 lakh rupees. Per annum 3 lakh rupees, 3 lakh into 5 years life of the asset. Lease agreement is 5 years. 3 lakh into 5 years, 15 lakh is the lease rent receivable by the lessor from the lessee. Okay? And what is the next one? Asset given on lease to lessee is specialized in nature and can only be used by the lessee without major modification. Sometimes there are some assets which cannot be used by general peoples. General business it cannot be used. Only for specific business it can be used. For others they cannot use. In such a case, no other choice. That person only can use means then that is also finance lease because no other person can use that asset. I have to definitely give lease to this person only because this is core type of, this is unique type of machinery. For other business it cannot be used. So this is what finance lease. Then come to the operating lease. Operating lease should be negatively defined. Negatively defined means what is not a finance lease is an operating lease. What is mentioned here? It is a lease which does not transfer substantially all the risk and reward incidental to ownership. As I said, risk and reward is not transferred to lessee. Lessor itself has the risk and reward. For example, lease period, life of the asset is 10 years. Life of the asset is 10 years, but the lease period is for only 2 years. Life of the asset is 10 years, but the lease period is for only 2 years. Balance 8 years, lessor will use the asset, not lessee. So that is one type of example for operating lease. Okay. So applicability just now we discussed. Then the next step is accounting treatment in case of finance lease. Next step is accounting treatment in case of finance lease in the books of lessee. Accounting treatment in the accounting treatment for finance lease. If it is a finance lease, what is the accounting treatment? In the books of lessee, what is the accounting treatment? In the books of lessor, what is the accounting treatment? Okay, that we have to understand. For that there are some procedure. For that there are some formula. If we know the formula, then we can apply. For practice, for working out the problem, we should know the formulas. Okay.